Hi, David Bassanese here, Chief Economist at BetaShares, and just wanted to give you a snapshot of my market trends report for May. Looking at the April performances for equity markets, we've been up and down this year. Unfortunately, we had another down month during April. The MSCI All Country World Index slumping in a total return sense, down 6.5%. There's three factors that are weighing on global equity markets at the moment. First and foremost, the outlook for aggressive interest rate increases in the US due to the strength of the US economy and really the central and inflation being at 40-year highs. So the central bank is trying to slow down demand and keep a lid on inflation and bring down inflation. Also, the ongoing war in Ukraine, unfortunately, which is adding to global inflationary pressures, upward pressure on oil prices, gas prices, and even food prices. Both Ukraine and Russia are major exporters in both energy and food, so that's being disruptive. And lastly, and most recently, has been the renewed lockdowns in China, as China continues to pursue its zero COVID approach, and quite startling images of major cities going back into lockdown does threaten to continue to disrupt supply chains. So this problem of supply chain bottlenecks, high global inflation seeming to persist at the moment, and hence the determination of central banks to raise interest rates to slow down demand and ensure that this inflation that we are dealing with doesn't get entrenched into wage and price behaviour going forward. What we're seeing in terms of thematics at the moment is that the ongoing rotation toward value and particularly commodities and energy over growth sectors, so value beating growth and commodities and energy beating technology stocks. That remains an ongoing thematic, and actually it's actually helping the Australian market. We've showed some outperformance in recent months on the back of the relative strength of the resources sector and the high share that the resources sector have in our market. So again, our market was only down 0.9% in April versus 6.5% decline for global markets. Look, going forward, it's still going to be a tricky outlook for markets. We do face the prospect of further interest rate increases in the United States and a slowing economy. And the big question is, will the US economy need to go into recession to get inflation under control, or will a soft landing, which we're all hoping for, be sufficient? And that is still the unresolved issue for the moment. But I think it's likely equity markets are going to remain on the back foot for a while longer, and things like commodities, energy tending to do better than technology for the next little while. That's pretty much it from me. If you'd like full details of my market trends report, please visit the insights section of our website. Thanks for watching, and I'll see you again next month.